Hi there, Stanton here from AlgoTrading. No, this is not clickbait. This is an actual backtest trading strategy, and I will show you the details of how you could turn $100 into $700 with my multifarious momentum strategy. So let's get straight into it. Okay, so my momentum strategy, I'm just going to go through it really quickly with you, the strategy. So we've got a 200-day moving average and we've got a 40-day moving average. So when the 40-day moving average is above the 200-day moving average, we look for buy positions, and when the 40-day moving average is below the 200-day moving average, we look for sell positions. So that's our first setting. The next setting is we're using this momentum indicator, and when the price is above 100, we look for buy. So in this case, when the 40-day moving average is above the 200-day moving average, and the current price is and the current level of the momentum indicator is above 100, we'll buy. And the inverse of that is when the moving average, the slow moving average, the 40-day or 40 period moving average is below the 200-day moving average, and the momentum level is below 100, we'll look for sells. And that is basically the strategy. I'm using my Multifarious EA. Currently having a special. I'm now affiliated with BYBIT, so very shortly I'm going to have my own login screen. But if you use the registration link below, deposit $100 and join my Telegram group, I will give you the Multifarious EA completely free, and also you'll have access to all the set files that I'm building at the moment. So support the channel, go register with BYBIT and get started trading, because there's some big gains to be made. Okay, so this is the setup. I'm going to just show you. First, we're going to run it at a constant lot. So one of the features of multifarious is that you could either use a constant lot, or you could have auto incrementing lot based on a percentage of your free margin. So the first test I'm going to do, I'm just going to run it at a constant lot. I'm going to run the settings. Yes, I'm running it in 1 minute OHLC. Please check my other video to explain these. Why I use 1 minute OHLC, and before I get a whole bunch of comments saying that it's not a proper test, because I'm not doing it in every tick for real tick. There's a video explaining all of these modeling functions. Go check that out. It's a very good video and will explain a lot about understanding backtesting. So let's run it in. We're going to run it on a constant lot of 0.1 fixed lot. So let's start the backtest. So this is a very safe way of running this algo. It's low risk. It makes decent profit. I'll show you once the backtest is finished. Okay, so the backtest is finished. Let's go have a look at the backtest. So if we look at the backtest, we could see that we started with $100. This is over a 2-year period. We made $14,000 profit. Our drawdown was only 7.6%. Very good drawdown, 7.72%. Very good Sharpe ratio, and we have about an 82% win ratio. So, decent algo, safe, nice equity curve. So this is perfectly acceptable to run it like this. But now the point is now, what if I deposited $1,000 into my account? I still don't, and I had originally $100. I'm not going to still want to run it at a 0.1 fixed lot. Or what if, the algo starts making money and, I want to increase my lot size. So instead of having to, change the settings in the algo, stop it, change the settings, re-upload it to your VPS, every time you want to change your lot size, if you want to reduce it, if you want to increase it, it's kind of a mission, to do that. So you just want to put your algo up, leave it, and see what happens. So the Multifarious EA has a setting here, which is a risk in percentage of free margin. So basically what that's saying is that whatever free margin you have available, this algo will risk, in this case, 10% of that free margin. So what's that saying is that, as your balance or your equity or your portfolio grows, it will increase the lot size. And the inverse of that is, if your portfolio shrinks, just say you take a couple of losing trades, it will also reduce the lot size accordingly. So you don't have to go in and say, okay, well, I'm losing, I'm going to make it safer. This sort of like sorts that out for you. And you could say whatever you want. You could do it at 5%, you could do 1% of your portfolio. Actually, 1% doesn't really work. So you're looking at from like 5% to 10%, whatever you want to risk of your free margin, you would put into this risk in percentage of free margin. Okay, so now I'm going to run the algo using auto incrementing of the lot size based on your free margin, or auto adjusting of the lot size based on your free margin, because I wouldn't say increment, because if you take some losses you also wanted to increment down as well. So now I'm going to run this back test. Okay, we're just going to let it run. So you can see as it's starting, it's using 0.01, which is the minimum amount that you could, the minimum lot size. So the way this EA also works is that if your percentage is too low, if it's if your percent, you want to risk 1% and you've got $10 in there, it will always default to the minimum lot size that you can use, which in the case of the BTC USD is 0.01. And as you can see, as the profit increases, the lot size and the volume will increase, until it gets to the maximum lot size. You see it's increasing there. As we're making profit, the lot size is increasing, until eventually it gets to the max lot size, which is 100. And let's have a look at the back test of that one. So we started with $100. Our total net profit is $7,135,515. So essentially you made about a $7 million profit on that one. Drawdown, still fairly good. 8.9%, 9.7%, that is still fairly decent. The max, like your relative drawdown, it doesn't really count, because at the end you're having like $98,000 losses for starting with $100. So really it's a bit skewed. That you look at your drawdown maximal and your equity drawdown maximal, and they're both at about 9%, which is fairly decent. Sharp ratio, it's exactly the same, because it's exactly the same trading strategy, and your win-loss ratio will also be exactly the same. 82.5% win ratio and 17% loss ratio. And if we look at the graph, that's pretty impressive compared to the other graph, where it went there and it went up to about 18,000. So, I mean, both strategies extremely profitable, one much more profitable than the other. But if you want to go and you say, like, what is the safe route? Well, there isn't really a safe route in this one, because if you took multiple losses on this one, it would just keep that lot size at 0.01 until you start making more profit. So technically speaking, the one where you make 7 million is technically safer to run than the one when I was running the 0.1 lot size, because it was starting at 0.1, where in this case it was starting at 0.01. So technically this is a little bit safer to run, with a lot more profit than the other EA where you set the constant lot. Alright, so that is the EA. I hope you enjoyed the video. Smash that like button. Please subscribe. Check out the links below and get yourself a free